with another stock analysis. Today we will be looking at Arista Networks, or ANET, the ticker. I'm going to be honest, I have never heard of this company before. I've never seen them before or anything, but they have had one of the best past years I have seen. Excellent stock growth, relatively low. I don't want to say relatively low. They're on the lower end of large cap stocks at just over 100 billion market cap. Looking pretty good though, but I figured I would make a video on them because I feel like I've never really seen anything about this company. So we're going to get into it. They do a lot of software development, cloud solutions, things like that, services related to that industry as well. So let's get into Arista Networks. Make sure to subscribe if you haven't, and yeah, let's do it. So getting into Arista Networks, we can see their multiple different products here. So development, marketing, cloud networking. They have a lot of network applications and some other things like Gigabit Ethernet. So a lot of different things. I think they're mainly focused on software and things like that, focused around the cloud. So $134 billion market cap. First off, no dividend. We have a target price of 121 and a long-term growth rate of 17%. Right now we're at 111, so they are a little bit below that target price, which is pretty good. Looking at their growth summary, first off, this is one of the best I have seen, rivaling even that of NVIDIA. Across the board, everything is incredibly positive. EPS growth, especially 62% 10-year CAGR on EPS is crazy. EPS is very good for when companies do valuations. And if companies, or I should say like investment firms, value a company higher, they're going to put more money into it. So that is excellent for valuations for the company, things like that. Most important thing though, sales 32% 10-year CAGR and free cash flow 63% 10-year CAGR, which is insane. That means per year 63% growth, which is crazy to even think about. Some competitors, just to kind of show where this company is, which again, I have never even heard of them before, but some similar companies, Motorola, Cisco, Garmin is there too. So they're fairly similar to them, I guess. But yeah, let's get into them a little bit more, starting off with the financial statements and see how their growth has been recently, which I'd imagine has to be good, because let's actually take a look at the chart really quick here. And just looking, let me go to the weekly view. Their growth has been very consistent and extremely strong. So they IPO'd in 2014 and basically haven't really seen that price since. They almost saw it in 2016, but I think they're a little bit higher there still. And since, I'm going to say, end or middle of 2022, they have essentially only gone up with no breaks in their uptrend. This is very, very strong. Looking at the beginning of last year, their stock price was also at or not last year. The beginning of this run, I should say, their stock price was right around $25 to $30 a share. So seeing where it is now, that is amazing growth. So anyway, getting back into it, let's see what we can see. So past couple years, sales growth has been very, very strong, which definitely backs up the valuation. I would kind of expect a little bit more in sales from that high of a valuation, but even still, it looks really solid. They do not have fiscal year 2024 just yet, but they do have the last 12 months of their September quarter, which does look like so far it is going to be very good for 2024. We're going to see a lot of growth. Let's see. One thing to definitely note is their net income growth. It looks like they doubled their sales over the past 4 years or so. A little bit more than doubled actually, but they essentially quadrupled their net income over the past 4 years. So that is what is really important here, at least in my opinion. That is probably the biggest improvement I'm seeing. Looking at their total shares, they are definitely diluting fairly consistently. However, I don't really think it's too major. There's really not a lot going on. I'm going to assume this is in millions of shares, which I believe it is. And it looks like they're only adding between 10-ish to 20 million shares per year, which sounds like a lot, but realistically, when they have 1.2 billion, it's not crazy. But overall, I think this will stop soon just with how much their net income has grown. So I don't think we'll see very much more dilution coming up. Other than that, let's get into the balance sheet and see what's going on here. So, first of all, 5 billion with a B dollars in cash compared to virtually no debt at all, which is amazing. We see massive asset growth over the past couple years, which is awesome. And actually, this does not include 2024. Let's get some quarters in here and see what we're seeing now. So, even more cash, completely eradicated their debt. So, honestly, I'm expecting some stock repurchasing activities, or maybe they're getting ready to do an acquisition, probably a very large acquisition, just based on cash situation and getting rid of all their debt. But overall, that is what I imagine could be happening. Or they're just looking to put themselves in a better position financially, which they have very, very clearly succeeded on. 7.5 billion in cash in their past quarter, and again, no debt, record assets, which is awesome. This upcoming quarter, we should see a ton more sales growth just based on how many assets they're adding and how consistently their sales have been going up. I would expect a lot more growth. Um, but yeah, we'll have to wait and see. Next up, going into the cash flows, let's see what's been going on here. So, overall, I would say very similar to the rest of their reports, where they've just seen a ton of growth over the past few years. You could see their operating cash flow was over $1 billion in the past quarter, which is, first of all, a huge milestone and also just an enormous number either way. A lot of investments being purchased, which we did see with their asset growth, which is to be expected. That is almost always a good thing. And then actually, we are seeing 3 straight quarters of repurchasing stock. And if we look here over the past just about 2.5 years, there actually have been more repurchases than there have been issuances, and they have been much larger as well, which is awesome. Hopefully, they continue this. They can definitely afford it, and I expect them to continue. But it's fantastic to see that happening, because the only real issue with their statements so far that I've seen was a little tiny bit of stock dilution. But seeing that they basically entirely taken care of that is awesome. So hopefully they continue. Hopefully they increase that as well, just based on how much net income they have been having. So overall, everything looks very solid. Free cash flow, again, also at almost definitely an all-time high, and also very consistent growth over the past few quarters. We saw them right around 500 to 600 million for about a year and a quarter, and now they've really broken out and they're over $1 billion now. So that is fantastic. Again, unfortunately, the best time to get into this company was a year ago, but hindsight is 2020, or actually not even a year ago, probably 2 years ago. But just seeing all of that growth recently is fantastic. Even before that, I would say their numbers were okay, but just in the past few quarters, they have really stepped up and they're seeing a ton of growth. So let's head back into the quarters. And unfortunately, we don't have too great of a view on the ratios because they don't have fiscal year 2024 just yet. But what we do have is the last 12 months of each quarter. So you can see there has been consistent improvements to gross margin over the past couple years, actually. They're at the highest we've seen in 2.5 years. Net margin is the exact same thing, highest we've seen in 2.5 years. So this is something you don't see very often. When sales are at an all-time high and their margins are increasing, that is one of my most consistent signs of a very, very solid company. If you can see those kind of things where usually when sales go up a lot, which this company has been seeing that, the margins tend to suffer. And usually that's okay because it gets canceled out by the sales growth. But seeing growth in both simultaneously is almost unheard of. That very rarely happens. I think the only other companies I've seen doing that were maybe Hims and Robinhood recently. So those companies also have seen explosive growth, which so has Arista Networks. So really, it's just a very good sign whenever you see margin growth and sales growth. That's just definitely one of the best financial indicators that a company is doing very well. Moving on to the debt, again, there is no debt, so there's nothing to go over there. But overall, everything here looks very, very good. A lot of improvement recently. And now let's see what we can see for their earnings. So getting into it here, hopefully, okay, we do have fiscal year 2024 actually. So a lot of the financial reports here just weren't updated completely yet, but we do have fiscal year 2024. So let's see what we've been waiting so much for. And of course, there is very little here. What I can say with the metrics that we very little have here is they beat on everything. Gross margin beat, operating margin beat significantly too, and revenue beat across the board. So excellent there. But overall, I was kind of hoping for a little bit more from this company, considering they're well over 100 billion. And here we go. So full year financial highlights, 19.5% sales growth year over year, which is awesome. Improved gross margin, non-GAAP improved margin. Net income was significantly higher, 800 million higher than 2023. That's probably a 40% growth, roughly, right around 40% growth. Other than that, non-GAAP net income, again, also saw a lot of growth. And fourth quarter financial highlights, 6.6% increased revenue from a year before, or the quarter before. Gross margin came in a little bit lower than third quarter and actually fourth quarter of 2023 as well. But again, the sales growth completely cancels that out. And other than that, it's kind of more of the same stuff we've been seeing. One thing I did just see, Meta and Arista build AI at scale. Sorry this is so stretched out, by the way. Feel free to pause and read through this if you want to. I'm going to see if I can actually zoom in, which we can. So Arista and Meta have a partnership to build AI, it seems, which is awesome. Other than that, looking through this a little bit more, it looks like they have a lot of different things coming up and also a lot of projects that they just launched, which is awesome. I don't know too much about any of this stuff, I'm going to be honest. So if you do know more about this, please let me know in the comments. I would love to learn more. One thing I do see right off the bat here, collaboration with NVIDIA. Usually, this is a gold mine, very similar to what happened with Cerence Technology, where they had a collaboration with NVIDIA and they 5x'd their market cap in basically a month or two. So very similar to that, although to be fair, that was a $150 million company and Arista is a $100 billion company. So a little bit different, but overall that is very positive for their long-term growth. So for that, I would say it is a very good thing. Last but not least, for Arista, I want to get into a little bit of a valuation and see what we've been going through here with their competitors. So we are looking at the PE ratios, and one thing I want to see if the named competitors has anything different. Looks like it's most of the same companies, but so average PE is 27.42 and 21.98. So let's put that in here, and 21.98, and that gives a fairly significant overvaluation of Arista. Let me just make sure I got those numbers right. Looks like they're okay. That gives a 53% downside. Now, one thing I would like to point out is that although this does seem bad, this company is also very clearly growing and innovating a lot faster than some of these other companies listed here. For example, Cisco is a fairly slow company with growth. They used to be huge, of course, and this is also comparing them to NVIDIA as well. So I could go back to communications and network hardware and see what the numbers are there. So the numbers here are much better for Arista, which I think this lines up with where they are a lot better as well. So 31.87 and 31.72. Let's put that in here and see what we come up with now. So that gives a little bit better of a valuation. I do understand why they are so overvalued compared to their competitors, because just looking at their stock price, it definitely needs to have some kind of a significant correction at some point just to kind of gather their value. But overall, I think they probably won't see that, honestly, just with how fast they've been growing, the partnerships they've created. Trying to think of some other things. Just the promise that I'm seeing here seems like it is enough to outweigh the fact that they could be overvalued. And also, I think their earnings are going to catch up to their valuation very soon, just based on the estimates and everything that I've seen. So I don't think this company's in for a bad year or anything. If anything, they might go flat for a bit, maybe a little bit of a correction and then slow rise. But overall, I would say the company still looks very good despite comparing them to their competitors. They are overvalued, but Yeah, that's all I have for Arista today. Hope you learned something. Hope you enjoyed. Make sure to subscribe if you haven't. Maybe like the video. Maybe leave me a comment. Either way, thanks for watching. Appreciate it. And I'll see everybody in the next video.